Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very good day. And in today's markets, guys, well, unfortunately, we were greeted with a very red day coming off the back of a long holiday weekend for Labor Day. Now, guys, we've talked about this on the channel before. We always knew that September was going to be a notoriously bad month, and it's usually the worst month as a whole for the markets in a given year. Take a look at this chart right here. You can see that on average on the last 25 years, September ending the month down about 0.5% on average over the last 25 years, far below any declines that we would have in the remainder of the year. Now, keep in mind as well that in the last 4 years of trading, September has been particularly bad. 2023, the markets were down 5% in September. 2022 had us down about 9%. 2021 down about 5%, and 2020 down 4% as well. So you can see that especially in recent years, the performance for September has been quite negative as a whole. But I don't think anybody was predicting that right at the start of the month, we would possibly get on the S&P 500, 2% declines and 3% declines on the QQQs. Now, those are pretty much half of the average declines of the last 4 years and really blow out the averages for the last 25 years clearly out of the water. So what exactly happened, guys? Well, in today's video, we're going to go over that with us together. So in terms of why the market declined at a first glance, it is definitely because of the ISM manufacturing report that happened early on this morning. So in today's video, first off, we're going to take a look at exactly what happened in that manufacturing report and why it left Wall Street so nervous that the markets are down tremendously today. Now, thereafter, we're going to take a look at our technical analysis rundown on our major stock market indexes and big tech names and see how those are shaping up, whether or not the bulls are nearing some areas of support or whether or not we could possibly see some steeper declines over the month of September. And thereafter, guys, towards the end, we're going to take a look at my portfolio and see the positions that I fired off in today's trading session. So without further ado, guys, a lot to cover today. Let us jump right into it. So SPY down about 2% and the QQQ's down over 3%, guys. This volatility has definitely not been seen since the later part of July and the early part of August. This reminds me eerily of the situation that we had leading into the month of August here, guys. This Thursday, 1st of August candle was the last time that we had a negative manufacturing report came out that really started spooking the markets. The following day after was your non-farm payrolls. And this week we have essentially almost the same setup. Take a look at this. Manufacturing report came in today. Tomorrow we get the JOLTS jobs opening. That's going to be a very, very important report that we have to keep our eyes on. And then on Friday comes again the non-farm payrolls report. So guys, this week is leading eerily similar direction as to what we had at the early portion of August, right? So keeping that in mind, let's take a look at the heat map right here and you will see, guys, it was not very good, but there were some bright points in the market that we cannot ignore. So for the most part, big tech really taking a bath today. Semiconductors down tremendously today as the concerns about overspending on AI infrastructure continue to persist. Financials as well were down for the most part, except for Visa performing very well today. And as a whole, guys, the rest of the market not doing too well, except for some of your more defensive sectors. Take a look right here. Consumer defensives as a whole had a bunch of green stocks in the mix. Healthcare as well was relatively doing good. Real estate and utilities, some other bright points. These are all the industries that usually perform very, very well in light of a potential recession narrative that we're going through right now. Take a look at your one-day relative performance, guys. The only sector that was green on the day largely was consumer defensives. Everything else to the red, and technology really taking it hard to the downside, 4.64% for that sector as a whole. On the 1 week relative, where does that leave us? Well, some of our defensive names are still in the green. Financials, consumer defensives, healthcare, real estate, and utilities ever so tinily in the red right there. For the most part, guys, though, those cyclical names, especially the ones most affected by a consumer slowdown, have been significantly in the red. Technology with valuation concerns coming to the downside, and you also had some energy and consumer cyclicals as well. So, guys, definitely not the best day for the markets at all, but what this is going to do is open up a ton of buying opportunities for us on some of the best companies in the world. So I am looking forward to it, even though we had some sharp declines and the market sentiment right now is not very good. We will be patient and take it one day at a time and snipe those deals as they come into our pockets, right? So before we get into more technical analysis, guys, let's go over that ISM manufacturing report and see why it was so bad. So the ISM numbers came in this morning at about 10 a.m. And as you can see, the expectation was about for a 47.5, and we came in at a 47.2. Now, anything under 50 signals a contracting economy, and the economy has been contracting, at least on the manufacturing side of things, for at least the last 1.5 years, guys. Take a look at some of our data that we have right here in terms of your manufacturing PMI. 47.2, you can see that arguably, if I blow up this little chart right here, some of the lowest readings that we've had pretty much since 2023, right? However, it was a little bit better than the one we got in July, the one that really caused the markets to unravel, but definitely was not a very good sign as a whole. Take a look at this one as well. Ooh, wow, we got hit with a paywall, didn't we? All right, so moving on to this one, guys, I'm going to go through a bit of the highlights of the article. U.S. manufacturing activity extends contraction for the 5th month. Demand continues to be weak. Well, we're going to get this paywall out of the way, guys. I'll show you a very, very quick trick. F12, refresh the page, press the little pause button right here, and we should be good. So, maybe it's a bit gray. Here we go. Now it should be good, all right? So, moving on, guys. So, the U.S. manufacturing barometer continued its contractionary trend for the 5th consecutive month in August, though the pace of decline eased slightly compared to July, as we saw from that chart before. August marks the 21st month of contraction in the U.S. manufacturing sector over the past 22 months. We know that we've been contracting here, guys. The gist of things is whether or not we are getting exponentially worse than we were before. And as of now, that is not the case, right? We're not seeing excessively steep declines on your manufacturing index right there. But definitely, guys, not a very bullish sign for the manufacturing side of things. This is a measure of output and demand. Two things that are being monitored very, very closely right now by the Federal Reserve. Let's continue. While still in contraction territory, U.S. manufacturing activity contracted slower compared to last month. Demand continues to be weak, output declined, and inputs stayed accommodative. Now, in a separate release, we also had another piece of manufacturing data come out, this one from S&P Global. They also revealed contractionary conditions in the U.S. manufacturing sector, with the index falling from 49.6 to 47.9, the worst reading in 7 months. That is for the S&P Global survey. Now, continuing on, the manufacturing sector acting as an increased drag on the economy midway through the 3rd quarter. Forward-looking indicators suggest this drag could intensify in the coming months. So definitely not the best outlook as a whole, guys, especially for that. And couple that with the month of September. As we saw, the month of September is notoriously bad, but usually it's supposed to only get a lot worse after the midpoint of the month. So here's your month of September as a whole. Usually at the start, we can see some slight declines before a little slight recovery to the midpoint. And then the end of the month is where we really start falling off. So are Wall Street traders potentially jumping the gun right now and foregoing this average seasonality and just starting to jump the gun and drop the markets right now? That is very, very possible, guys. We do not have too many data points remaining before the Federal Reserve has their rate decreases. So obviously this week we're going to get the JOLTS report, we get the non-farm payrolls, then there's CPI, a little bit of retail sales, and on the same day as retail sales, about 2 weeks from now, on the 18th of September, we are going to get the Federal Reserve interest decision day, guys. And in my humble opinion, this is most likely going to be seen as a sell the news event. The why the sell the news event, guys? Well, because the media and analysts can argue both of these possible interest rate cuts as a negative, to have a negative connotation behind them. If the Federal Reserve only does 0.25% in terms of cuts, well, then people may argue that it's not enough. The Fed is too late as a whole, and they're just not doing enough. If they go in and do 0.5% out of the gate, well, people are going to criticize, once again, the Fed for being too late. And now they're going to criticize the Fed for potentially being worried and trying to get ahead of the curve, right? So it's kind of a catch-22 for the Fed right now, which is why I do believe that it may just be a sell the news event. So September, most likely going to be quite a red month for the markets. But as I said, guys, it's going to free up a ton of buying opportunities. So the moral of the story right now is to be very conservative with our cash. We've obviously spent the last couple of months being optimistic, but very cautious in the markets, right? So the cash that we still have on the sidelines and potentially defensive strategies right now are going to have to start to be implemented, especially through this volatility. Keep in mind, after September, we come into obviously October, but that is the pre-election seasonality run-up as well, and usually that can be a very volatile time. Essentially, what I'm saying, guys, is the months of September and October are going to be quite volatile for these markets, so it is not the time to be YOLOing call options near the top at all. If anything, it's a time to build a shopping list, get your favorite companies on a list, guys, and make a plan of action as to how and which of these companies you are going to buy. As I said before, guys, we have to be pacing ourselves, right? Even though we have big red days like today, we don't want to splurge all the cash at once. The goal is going to be to try and pace ourselves throughout these declines, as we know that most likely the markets will probably have a very decent end of the month of October, and then we have the November and December rallies, which usually always happen in the markets, right? So not looking the best right now, but also not looking the worst, guys. There is some light at the end of the tunnel. These markets are very, very, very resilient right now, so we will do the best that we can. We will be implementing some hedging strategies on the channel as well, implementing a few short positions, but all for the most part, guys, the strategy remains the same. Find top quality companies at great prices and just buy the dips and hold, guys. It's very, very simple, especially if you're looking for long-term investing purposes, right? So let's move on to some technical analysis now that that's out of the way. Looking into the SPY right now, well, we're taking a look, guys, at the SPY, right? We were looking for the possible all-time high breakout. This was a very beautiful bull flag at the top end of this range of consolidation. And now, unfortunately, we have lost it. Big break to the downside right now. So no break of the highs and a break of the lows. Daily downtrend is underway for the SPY, which leads us to believe that we are now into weekly consolidation in these markets. Where could we possibly be consolidating to, guys? Well, this is going to be a very big level of support here, guys. 546 down to about 538. The bulls absolutely need to hold this level if you want to have any semblance of a chance of setting up for a weekly higher low and possibly onto a weekly uptrend leading into the end of the month of September. So it's time, once again, for the bulls to start playing a little bit of defense. This is the area that I would not like to see lose, because if we do lose this, guys, and take back too much of the move, the best we can possibly get is a tight range of consolidation leading through this volatility. The worst that we can possibly get, of course, would be an entire weekly rollover. In my opinion, that would be a very, very unlikely scenario, because usually when we have a 100% recapture of a downswing into an upswing right there, usually it leads us to believe that the bulls want to at least start defending the size of this move, right? If we were to give it all back, guys, that would be the worst case scenario for the market, and we would possibly be positioning for some of those recessionary and contracting scenarios in which we can possibly see the S&P come down 10-15%, right? That would be the worst case scenario. We are not there yet, but I'm just letting you guys know what that could possibly entail, right? From here all the way down there, that will be roughly coming back all the way to April's lows, about 11% to the downside before we run into any major further support for these markets. So we'll take this one day at a time, guys, but definitely the bulls losing a step in the direction of a possible all-time high break. We also have the MACD on the daily kind of curling over right now. So what we will be looking for, as well as I pointed out in my Discord today, guys, possibly looking out for some short setups in these markets. If we do retest, back testing this 555 level on the SPY, it could open up a very nice opportunity for some potential shorts or at least some hedging of these markets. Take a look at this hourly time frame. That is going to be the style of short that we're looking to possibly make on the SPY. We're probably going to use QQQ to make this trade happen, just because the volatility is usually better for the QQQs, especially to the downside. Now, moving into those QQQs. So QQQs, contrary to the SPY, never really protected a tightening range at the top. QQQ really was just plunged into a daily downtrend almost as soon as they hit their high right here. So daily downtrend, we know since we're in a daily downtrend, we've already been in weekly consolidation now for about 2 weeks worth of time. And the bounce on the QQQs was not as good as the S&P. The size of the bounce on the weekly was quite good, about 78.2%. And it does give the bulls an opportunity to set up for possibly a weekly higher low, for possibly a weekly trend change back to the bulls. But they're going to start to need to play some defense very, very aggressively, very, very soon. Take a look at this right here. This is the last time that the market started to unravel due to unfavorable macro data, and we're coming into that area immediately right away. So these levels are as follows, guys. 456. If we lose 456, guys, it is definitely not going to be pretty for the bulls. You'll be sacrificing too much of the move at that point, guys. And if we start pulling back in the low 450s, even the high 440s, it could lead the bears into a possibly retest of these lower areas, guys. The best case resulting scenario could be a tightening range through the volatility. The worst case scenario, of course, is simply the weekly downtrend, moving us into further monthly consolidation. And then we will take a look at these levels right here. 420, 414 is going to be our last area before losing our monthly timeframes. So a lot of trading left in the markets before we hit those levels, of course, but we need to see how the bulls are responding to these major areas of contention. If they just blast through them like they're not even there, guys, we know that there's a lot of fear in the markets, and we know we have to start being a lot more patient with some of our trades and potentially throwing on a bit more aggressive hedging to the downside, right? Now is definitely not the time, as I said once again, to be going extremely YOLO bullish on these markets. It is the time to be buying the dips slowly and progressively on your favorite companies in the world, guys. It is not a time to be speculating on smaller growth companies right now, in my humble opinion. Moving into XLF financials right now. So financials were actually doing quite well on the morning before kind of unraveling after that ISM report. As you can see right here, we started off very, very bullish, and then we kind of started rolling back over. So you're seeing a rollover of the hourly time frame, possibly a loss of the hourly time frame, which may lead us into a bit of daily consolidation. Now, daily consolidation is not bad on the XLF. As you can see, we do have tons of space, guys. Anything pretty much above 43.60, looking for a daily higher low for possibly continuation of the daily uptrend. In the event that XLF unravels with the rest of the markets and we get a daily downtrend, just understand we have tons of space on the weekly here, guys. Look at this gorgeous weekly uptrend. Tons of space right now to set up for a weekly higher low for a possible further weekly all-time high push. The area of confluence for me is this yellow line right here, 44, all the way down to about 43.50, which is your 12 EMA on the weekly. So I wouldn't rule financials out just yet, but still today, a first meaningful day of pullback. As you can see, the XLF has been doing a great job of carrying these markets. It may just be getting a little bit tired right now. Moving into healthcare as well, down about 0.19% on the day. And healthcare was actually performing beautifully in the morning as well, up until the midpoint of the day. The XLV, has not lost the hourly time frame just yet. Still trying to set up for the hourly higher low for possible continuation. That being said, if they roll over too, guys, keep a very close watch on this level right here, 155 down to about 154. In the event we roll this over, we will be losing this beautiful daily uptrend to the bears and possibly setting up for the daily downtrend. That rollover would cause probably a weekly consolidation phase in XLV, and that could send us down into these lower levels right here, 151, all the way where this big support area is, and where we have our weekly 12 EMA as well. The bulls do have tons of space in healthcare right now, and I will be looking for some of these plays in the event we do start pulling back in a bigger fashion on the XLV. I will be looking potentially for some healthcare plays in the market right now. Really going to be focusing on 3 sectors as a whole. Well, maybe 4 sectors as a whole, guys. I will be focusing on utilities. I'll be focusing on consumer defensives. I'll be focusing on financials and healthcare. Technology for me as of now will be taking a back seat. I will still be playing it, but I'll be playing it in a much more conservative fashion, right? I want to be where the money is right now. And where the money is right now, obviously we saw on the heat map, guys, it is really coming big into healthcare, staying in financials, and obviously coming into our defensives and some of our utilities plays as well. So those should be the better performing plays over the next 1 to 2 months, in my humble opinion. Now, moving on further, let's move into SMH. So SMH Semiconductors really coming down hard today. One of its worst days, guys, since pretty much the sell-offs in the month of September, right? So let's just go back here. As we can see on the 17th of July, this was a 7.12% day to the downside. And the rest of the days, although they were big, they were not 7.5% and an extra 0.29 in the after hours. This is probably one of the worst days for semiconductors in the last 4 years. So it has to be notable to us. What we were looking out for, guys, leading into this week was the fact that we were in a daily downtrend already, and we were looking for the bulls to protect this green box of support, 238 down to about 225. We have pretty much almost broken through this area in one single day. We were looking for possibly the setup of a weekly higher low into a weekly trend change for the bulls, but it looks as if the bears are just going to start running away with this one, guys. A little bit too much power to the downside right now. So I will remind you, the size of this bounce on semiconductors was good. It was a 618 bounce, but it definitely was not a 100% retracement or an 80% retracement. So in this case, the bulls do have a chance at resetting into a weekly higher low and going into a weekly uptrend, but they're going to need to stop the bleeding fairly shortly, in my opinion. I would not like to see them come lower than this 50 EMA on the weekly right here, and that is sitting about 213 on the SMH, right? If you come down too low, guys, it opens the door for, at best, a tightening range of consolidation through volatility. At worst, it opens the door for a revisit and possibly break of these lows, which would result probably in a loss of the monthly uptrend, guys. We have not lost the monthly uptrend since the past 2 years, since we reclaimed it in the month of October of 2022. Take a look at this glorious uptrend, guys. And now, after 2 years and several months of overbought conditions, it may just be the time to unwind the semiconductor trade as a whole. So semiconductors, I still am interested in playing them, guys, but I will be extremely picky with the names that I do choose to play and the levels at which I choose to play them as well. So be very, very careful with semiconductors right now, guys. They are starting to fall out of favor. They were a lead bull for a very, very long time. And now, as you can see, every single time we have a red day, they are your lead bears. So please be very careful if you choose to play semiconductors right now. Now, moving into the next one, IWM Russell. Russell down about 3% on the day. And the Russell, as I've been saying, guys, right, I know this trade looked quite juicy for some continuation, but I would be very surprised if the Russell is able to run, especially in the face of possible recession headlines. It is just not going to happen, guys. Number one, we have two big resistance up here at 2021 and 2020 levels. We're probably not going to be able to break those, guys, unless the SPY and the QQQs are breaking their own all-time highs. So that being said, on the Russell right now, unfortunately, we have now lost the daily uptrend. As you can see, we have now broken the daily higher lows, and we have set up into a daily downtrend motion right now. So in terms of the weekly as well, we were trying to set up possibly for the weekly uptrend recapture with maybe setting up a weekly higher low and weekly uptrend, but I do not think that is going to be the case. Now, we do still have good support down here that we're coming down into 210 down to about 208, guys. But I would not be surprised if the bears, if the data this week is quite negative, if the bears are just able to roll over the entirety of this move and start retesting our lower area of support, 201 down to roughly 190. I've been waiting for this one, guys, and as I said, I will not be touching the IWM unless I see 190 or better, especially not in the face of some recessionary headlines, guys. It is just not a very good risk to reward trade, in my humble opinion. So we'll keep this one on the back burner, but just be very, very, very cautious with your growth stocks right now. Now, lastly, moving into the Dow Jones, one of your indexes that is supposed to be one of your more defensive indexes as a whole, even they were down, unfortunately, guys, 1.5% over the course of the day. So let's take a look at the daily right now. So we know that the Dow Jones was in a very nice, healthy daily uptrend, and unfortunately, they have just lost the lows right here, right? So loss of the lows, probably loss of the hourly time frame as well. So probably heading into some daily form consolidation. At this point, maybe just looking for a lower high into lower low setup, which would be a nice cooling off for the Dow Jones. 4 weeks in a row of rally may just be some time to take a little bit off the table right now, set up lower for a weekly higher low, and then possibly make another attempt for the all-time highs in the event the data is good and the rate cuts are well received, of course, right? So we do still have a lot of space. I would not rule the bulls out just yet. Beautiful weekly uptrend, still looking for that weekly higher low for possible further trend continuation, but just be very, very cautious in these markets as a whole, guys. In my opinion, the Dow Jones stands to hold up better than most in these market conditions. Now, excuse me, moving into the VIX, give me a very brief second. So moving into the VIX right now, the VIX up 33% on the morning, right? So really pretty much blasting out of the gate and just continued all day. This is eerily similar exactly to what we got last 1st and 2nd of October. As I was saying, that manufacturing report, and then this was pretty much the manufacturing report. That day went up 13.5%. The following day on the Friday was non-farm payrolls up another 25, almost as high as 50% that day. I remember it as if it was yesterday. And then we ended up with the Black Monday day. So could we potentially see another rally in the VIX? Yes, very likely that we're going to see a further rally in the VIX, especially if the data is not well received this week. So if the rally in the VIX comes all the way into the 30-35 area, guys, you guys know what I'm going to be doing. I'm going to be looking to short the VIX because we do not have certainty that this move is going to carry through the next days, right? If the jobs reports are received well and are good data, well, then this entire move of the VIX can just unravel in one single day. One thing is for sure though, guys, if we start moving into the 30 to 40 area, we cannot sustain those levels forever. As you can see, usually when we start spiking up, it lasts for a few short weeks, and then we do get some little drawdown periods. This was 2022, a very bad period for the market, but you can see as of lately, we've only really been popping up there for just a few short weeks at a time. So in the event this week is another week that plunges us, that increases us into these 30 to 40 levels, let's say, I will be looking to short the VIX, put on a few shorts with SVXY, probably going with a combination of shares and options. We did a great job last time. It fractured these lows right here. We pretty much bought the absolute bottom and rode them back, right? So this is the inverse of the VIX if you're looking to short the VIX. So that being said, that is how I'm going to be looking to play this one as a whole. Now let's move into some of our big tech names, shall we? So moving into Apple with a notoriously rare red day in the last 1 month of trading, but now Apple is kind of mimicking the SPY. You can see this failed breakout attempt by Apple bulls right here, trying to set up the daily uptrend, trying to go for that all-time high breakout, and now we just rolled over. This is actually worst case scenario for the bulls, guys. You never want to see a chart that peaks above a resistance location and then immediately fractures the low. That tells me one thing, guys, that most likely we are going to head into weekly consolidation right away. So now for the bulls, we're probably going to be looking for a lower high, keeping in mind that this area right now, 228 down to about 223, is going to be overhead resistance for the bulls. Might just be looking for a lower high into possible lower low continuation and maybe into further weekly consolidation. Now, we do have a big area of support below us that is 219 down to 214 as a whole. So we could be looking for the bulls to put up a temporary stop right there. But I would not be surprised, guys, if we start rolling over even more than that on Apple. Apple's growth rate right now is not very good, and their valuation right now is very, very, very high. So their share price can come down significantly before they're considered to be at fair value. Personally, myself, I will be waiting on the sidelines for this one. In the event we get continued weekly momentum to the downside, we are probably going to come into the lower 200s, and that's where I'm going to be looking for some plays on Apple, preferably closer to the $200 level as a whole, which is your previous all-time highs, and that would line up with some of your higher time frames, right? Keep an eye right here. I know you can't see them with all the lines right here, but let's take a look at the monthly on Apple, guys. Gorgeous monthly uptrend, but it may just be some time right now for a little bit of monthly consolidation for the month of September, maybe early October, and it could just be leading us to set up for a monthly higher low for possible trend continuation in the favorable months of November and December. And I will be looking for that process down here in the lower $200 range. As of right now, it's just a little bit too rich for me. Moving on to AMD right now, AMD down a whopping 7.82%. Unfortunately for them, guys, they had a great rally, but as you can see, we've pretty much all but given most of that back right now. Daily downtrend is clearly underway for AMD stock, and any single rally moving forward, guys, may just be for a lower high into possible further lower lows. Keep an eye on your MACD. MACD on the daily is crossing, and the MACD, guys, is usually a lagging indicator as a whole. You can see the drop-off did not start when we started curling down on the MACD, right? The MACD is a very lagging indicator, but could lead us to believe that there may just be more pain to come in semiconductors. So that being said, guys, where are we going to target? Well, we've just now broken through our area of the 137, right? We were keeping a very close watch on these two lines. I mean, you can say it's a somewhat of a range, right? 137 down to 135. If we break through that, unfortunately, that is the last form of support before we start getting into some really low levels, talking about the $120 range, right? So keeping that in mind, we were always in a weekly downtrend. We know that the size of the bounce on AMD was somewhat adequate, right? A 61.8 bounce. Fairly decent bounce for the bulls. Now they will have to play defense. Can they set up for the weekly higher low for the possible weekly trend change, guys? Or will they just be plunged into the depths of the lower 120s where we have a bit more support going for us, right? So this whole area now is support, but if we lose this into a larger weekly downtrend and possibly into further monthly downtrend consolidation, guys, the next area that we're going to be looking for AMD is about that 120 all the way down to about 100 level. I know that sounds really, really low. The valuation right now is also even at 145. I didn't even do it at the 130s yet. The valuation at 145 was very decent, guys. So in the lower 120s, I will be a big fan of picking up this stock, especially if we're looking to make a play on their growth for next year, right? The thesis for AMD is that they're going to be a second competitor in the data center landscape, and most of that revenue and scaling process comes in 2025, 2026, and onwards for the EPS, and similarly for the revenue. So if that is our thesis, it stands to argue that we need to be patient with the stock rather, and we need to be picking it up at the juiciest levels possible. And for me, that really starts in the lower 120 range. You know, we have to readjust our targets to the downside. I was saying over the last couple of weeks, I like this 135, but if we're going to start off the month of September in this fashion, and if we're going to be so sensitive to news reports, which we should be because the economy is on thin ice right now, then we have to revise our targets lower. I will be probably looking for the lower 120s all the way down to about 110, closer and closer to this 200 weekly moving average sitting about the 110 right now. But it just goes to show you guys, when you do not have the higher time frame control, such as the monthly and weekly, it is very tough to rely on short-term support levels. Moving into Amazon right now, Amazon down about 1.26% today, but it doesn't look too bad on Amazon's chart as a whole, right? Very nice juicy bounce underway, got the daily higher low, and now we're possibly looking for the continuation of the uptrend. Now, in the event the markets continue unraveling this week and we were to break the lows of last Wednesday down here, 169, that would be daily downtrend rollover, and we just might be looking for a revisit of this lower area of support for Amazon, which is going to be this green box, 173 down to about 160. Why is this level so important? Well, it was huge support for the markets. Well, now it's support. Previously, it was resistance for the markets 2020 and 2021. So it stands to argue that this area is going to be quite difficult for the bears to just get through in one clean shot, right? That being said, I do really like to play Amazon down in this lower location right here if we can get some extension of the daily downtrend and possible weekly, weekly momentum to the downside as well. I'll probably be looking for the mid 160s, guys, to play some Amazon at. I love this location for Amazon. So probably if we do start revisiting the lower 160s, it will free up some of the short puts in the 161, 160 area, maybe even some put credit spreads down here, and possibly even some call debit spreads with a little bit of time on them to eventually get that recapture down at the later part of the month of September, or maybe even into October when we start coming into some more favorable seasonality like this, right? So I do still love Amazon. There is nothing wrong with the company. And I think the moral of the story, guys, other than some of the concerns with semiconductors, none of the fundamentals of these companies have changed, guys, over the last 1.5 months of trading. Talking about Apple, talking about Amazon, Google, Meta, Microsoft, Netflix, right? None of the fundamentals of these companies have changed. So it stands to argue, if we get presented with further buying opportunities, especially some juicy dips such as these, well, we need to be picking them up because the fundamentals of the company, guys, have not been affected whatsoever. Now, let's take a look at Google. So Google down about 4% on the day, one of the largest declines for Google in pretty much the last 1 month of trading since they had their 3% day here and another couple 2% days right there. But definitely one of the worst days for Google in recent memory as a whole, right? So Google is on thin ice right now as a whole here, guys. We're really working with one last line of defense, which we're coming into right now. This whole zone right here, 158 down to about 157, right? The lows of the Black Monday sell-off. So if you thought it was a good deal to buy Google back here, well, you are getting some more favorable pricing again, which is why I was very patient on Google this entire time, right? Wasn't playing Google too aggressively, but now that we're coming down here, guys, we have to start playing this beautiful company because the valuation is very, very good right now. So daily downtrend is clearly underway on Google right now. Any bounce will just most likely be looking for a lower high, anything below pretty much 169, looking for the lower high for possible lower low downside continuation. Keep in mind, as we were saying on Google for the last couple of weeks, guys, the bounce size on Google was one of the weakest bounces in all of big tech, bouncing only 38.2% on the weekly after that 3 weeks of rally that the rest of the market have. So now the probabilities for the bears to roll this over are very, very high. Where could we come back into, guys? Well, this area right here, 152 down to about 145. That's going to be a nice area. It is the previous all-time high areas of resistance, previous resistance down here in the month of February, and could be acting as our first location of support, looking like a very nice area to be playing Google, guys. That would be downside expectations on Google of anywhere between 21 and 25%. And if you go back in recent history, guys, in the context of monthly uptrends and overall bull markets. Usually that is what the expectation for Google, right? If we come down 21 to 25%, it is usually a great time to start buying this stock as a whole. So I will be keeping my eyes peeled and keeping some premium available to be using this for some short puts in the lower $150 range, all the way down to about roughly 145. It is really a good value proposition to be buying Google right here, guys, right? The valuation is excessively good. We did this one at 180. Now the PEG ratio currently should be sitting closer to about 1.2, 1.15. That is getting into extremely attractive valuation metrics right there. Now moving into Meta. Meta also struggling to maintain the all-time highs. We were noticing this for the past couple of weeks, right? Very big hesitation to break the all-time highs and really start setting some new levels to the upside. That being said, daily downtrend is now sufficiently in motion, so we know that we are in for a weekly consolidation on Meta. Now, keep in mind, guys, we had a 100% engulfing move right there. We might just be looking for a weekly higher low for possibly a second attempt at those all-time highs. One thing's for sure, this lower area of support is extremely strong. 481 down to about 457, right? It has been support essentially for the entire year since the early portions of the month of January. So the Bulls will have a lot of defense to be playing here. And as a whole, if we do come all the way back down here, guys, it's going to open up some very nice opportunities for possibly some put credit spreads in the 450 all the way down to about 430 range, maybe even some short puts if you have the capital to play it, and even some call debit spreads, guys. Meta's fundamentals are amazing. The PEG ratio is amazing right now. The free cash flow yield is amazing as well. And we do not have any red flags of slowdown to their business, recession or no recession as a whole, right? So Meta, I love it. As the valuation, as we come down and the valuation gets even better, I will be looking to acquire some Meta and swing trade Meta in these lower locations right here. Just be kind of patient with it. We know the markets are not having the best time right now. We know September is fairly weak for seasonality, and we know we have a very large amount of possible negative catalysts for the month. So be patient with your trades, guys, right? We're going to be able to pick up all of these companies at relatively low levels potentially, and then we are going to make a lot of money on the eventual upswing, guys. I do not think we are going to go into an asset crush cycle like 22 as a whole, right? The expectation right now, the expectation as a whole, guys, is for some fairly decent. Do I still have the chart pulled up right here? I think I don't have the chart pulled up here anymore. But just to say, the expectation right now is for a soft landing, right? So the market is pricing in a soft landing for the foreseeable future. The only time we can possibly get some major downside is in the event we delve into hard landing territory, but the data does not support that just yet. All of the slowdowns that we're seeing right now do support the slowdown of a soft landing situation. So moving into Microsoft right now, Microsoft down about 1.85%. Not the best day for Microsoft either, right? And we were also noticing that the bounce on Microsoft, similar to Google, was one of your weaker bounces. On the weekly, take a look at this, barely a 50% bounce. Not as good as the SPY and not as good as some of Microsoft's industry peers. So keeping that in mind, we are now set up for the daily downtrend. Daily downtrend now in motion with the lower lows. So possibly looking for some downside continuation into our lower area of support. Coming into the 200 daily moving average right now, 405, and coming into this larger area of support, 402 down to about 391. So on the weekly, guys, possibly looking for a retest of these lows. Microsoft has to start playing defense soon, or it will start losing the area that is held as support since the month of January. Essentially, we are in the territory, guys, that if September and October are really, really bad, Microsoft could potentially forfeit all of its gains for the year, right? Still up about 9%. So it's going to take a lot because month of January started all the way down here. But if we really start coming down hard here, guys, just understand that the next big area of support for Microsoft is 363 down to about 340. If Microsoft comes down here, guys, I'm going to be throwing some leaps at this stock in a fairly large size fashion. So looking forward to these dips. I will still be willing to play Microsoft a little bit right here, guys, if we come down into this area. I'm not convinced that the bears are going to be able to get through this one. So I will probably be playing some swing trades on this, most likely call debit spreads in this location right here with about 2-3 months of time, probably the Novembers or the Decembers possibly, right? But in the event we come even lower, I'll be throwing some leap contracts on this stock right there. I love Microsoft at that location, and the valuation should be a lot more manageable if we do come all the way down here. Of course, we would be forfeiting the monthly uptrend at that point, but we can obviously get it back. It'll just take a long time in terms of grinding back the levels higher, but there's nothing wrong with this company at all, guys. I love this one. Just be careful, kind of looking a little bit like a head and shoulders on the weekly time frames, right? So you're gonna be careful with it, but Microsoft is one of my favorite companies in the game right now, guys. We need to start trying to acquire some of this company as it starts dipping through the levels. Obviously, we don't know where it's gonna stop, so we have to take some chances right here, nibble a little bit, and this is where I start going a little bit more heavy, or actually very, very heavy on this one. Moving on to Netflix right now. Netflix down about 3.71%. They tried to go for the all-time high breakout, guys, but the bears were just too strong, breaking it now to the downside. So similar situation to Apple, right? We kind of tried to look above from the all-time highs and now breaking down below. So right now, Netflix, unfortunately, in a daily downtrend setup, which means that we are in for weekly consolidation. Now, good thing for the bulls, they have tons of space, guys. Anything above the Black Monday lows right here, 586, is just going to be looking for a weekly higher low for possible further trend continuation. The next area of support for Netflix down here is about 653 down to about 631. And same thing with this company too. The fundamentals of this business have not changed at all. If anything, they have gotten even better, guys. So I would not be surprised if the bulls are able to support this area right there. But in the event we lose it, guys, well, then you know that the previous area we were looking at before, last time we dropped was all the way down here. It will be a darn shame if the bulls would give back all of this move. We'll take a look at that. We'll take a look at that situation if we get there, guys. But my little nibble area for Netflix is coming up shortly here in the 650 range. And then my big buy the dip opportunity is coming up down here, 572 down to about 528. I'm not saying that we're going to go there, guys. I'm just saying if we go there, I will definitely be a buyer. It was before this all-time high. Nice resistance area, should be support for the bulls currently, and now support for the bulls in the near-term future as well. Nothing wrong with this company, just overall market weakness. Leading into NVIDIA now, NVIDIA down 9.53% and another 2% in the after hours, right? So very, very brutal day for NVIDIA right now, coming down extremely hard. Probably one of NVIDIA's worst days. This day is worse than earnings. It's worse than pretty much every single other day that we've had on NVIDIA in the last 3, 4, 5 months of trading at this point, other than this one in the month of April 19th. You can see right here, 10% flat day, right? So NVIDIA coming up into a big area of support right now. 105 all the way down to roughly $95 is going to be the area that we're looking for the bulls to play a little bit of defense. So the daily bounce was nice, but we knew that if we lost this area, we would be in for a daily downtrend and further weekly consolidation. The bears made very quick work of this 120 all the way down to 115 level, which is why I was always saying, guys, I did not like playing this level. I want to be playing this lower level right here. A lot better support in my opinion, right? Moving on in, guys. So weekly downtrend, gorgeous engulfing move. And now the bulls have sacrificed a lot of that move in just the 2 past weeks of trading. So the best case scenario for NVIDIA right now is delving into somewhat of a tightening range to last through the volatility, similar to what we kind of had last year in this same time period, right? Notice August through September and October was very sideways and choppy action. So that's the best case scenario that we can maybe end up with NVIDIA right now. Of course, the worst case scenario would be breaking the lows of that Black Monday session at 91. That would set another weekly downtrend in motion, and then we'd be going in for heavy monthly consolidation. Anything pretty much above 75 is going to be looking for a monthly higher low for possible further trend continuation. We know that NVIDIA's growth cycle has been coming into question ever since their earnings, but I do still believe that this is a very, very solid company. The better discounts we can get, guys, that is going to be some tremendous shopping opportunities for us. But NVIDIA has now been monthly overbought for such a long time that it may just be time for some sideways consolidation, right? Moving into Tesla right now. So Tesla, of course, having a negative day as well, not spared, 1.64% to the downside, but held up better than most. I was actually surprised that Tesla did not have a worse day than 1.64%. So let's give some context to the move right now. Daily downtrend, looking for the possible lower high, pretty much an equal lower high right now, but we were probably going to be looking for the continuation of the daily downtrend because we are losing the higher time frames, right? The monthly is not looking the best, is looking a little bit weak right now, and the weekly as well is kind of looking weak, right? The size of this bounce in relation to this move right here, the size of this bounce right there was only a 50% move, so it stands to argue, especially with no real bullish catalyst for Tesla coming up much before the robo-taxi event in October, well, we may just be coming into a tightening range on the weekly, or at worst, a revisit of these lows down here at about the 184 level. I am not going to to play Tesla right now to the upside. As a matter of fact, I did open up a short position on the company today, just because I think that that Tesla is probably going to be able to catch up to the rest of the market, right? If Google is selling off 4% with much better fundamentals than Tesla, I do believe that Tesla eventually will have one of these 5-6% days to the downside, and we will be looking to profit from that pain. So coming down into it, guys, I do think there's good support down here around the 200 level. That's the 200 weekly moving average. But below that, if we break through the 200, guys, it gets dicey really quickly. The next big area of support comes in, of course, at our 180 down to about 160 level. So Tesla, I'm not really bullish in terms of the near-term future on the company. Long-term is a completely different story. But in terms of the short-term price action, I do believe that the revisit of these lows right here, 200 down to about 190, is a very likely scenario for the near-term future in the next few short weeks. Moving into Palantir right now. So Palantir coming down about 3% on the day. And we were kind of looking for this, guys, as of last week, right? We knew that the bulls gave a little back here, looking for the daily higher low. Anything above this guy, 21.25, was looking for a daily higher low for possible further trend continuation. But we had noticed the weakness in the QQQs already. So we would not be surprised if we set up for the lower high into lower low and go into a bit longer weekly consolidation, right? Obviously, it's a very nice weekly uptrend right now for the bulls, but we may not be spared from a few more weeks of selling into this stock, right? So where are we looking for the move to potentially bottom out? If we break 29.82, daily downtrend is in motion, and then we keep an eye on this location right here, guys. 29 down to about $28. It was the very big resistance area from 2021 and 2020, and may just prove to be a first line of defense for the bulls right there. And you also have your weekly 12 EMA. We will see how the bulls react or play defense in this area, right? And it stands to argue in the event the bears are just much too strong and just blast through this area as it's not even there, well, we need to, of course, be looking lower. And the next area that I would prefer to play this stock at is about 26 down to about $25, guys. If we get that opportunity again, that is where I'm going to be playing Palantir a little bit more aggressively, where we have more recent areas of support or resistance rather to be basing some trades off of, right? So that would be an area that I'd be looking to play Palantir a bit more heavier at. But Palantir, I mean, holding up better than most right now, right? Off of its most recent 52-week highs, only down about 7%. It's actually holding up a lot better than other companies such as Amazon, Google, and even Microsoft, right? So very surprising. Congratulations to the bulls for playing such good defense on this stock right there. And that pretty much concludes our view into the markets today. Hopefully I did not sound too bearish, guys, but we need to understand what is the expectation for the month and the fact that we have a lot of uncertainty ahead of us, right? So the moral of the story is to be pacing ourselves in our trades. We can execute some hedging strategies as I've shown on the channel, right? In previous times, writing covered calls is a great option in the markets right now, or potentially taking some hedges. Some of the hedges that I am considering is SQQQ calls with a little bit of time on them, possibly through the mid-October point. So maybe about 45 days to expiration. I'll be looking probably at some SQQQ $9 calls where we are right now. So they are at the money. We're going to be looking at them for the month of September, essentially, because you saw how far we got up on the Black Monday sell-off, right? Got all the way up to 11. So it could provide us a very good hedging opportunity. And the other one is going to be TLT. I like this one as a hedging opportunity as well, possibly looking into some calls for maybe the month of January, slightly out of the money. I may just go with the 100s for a nice round number, leading into the rate cuts. Usually bonds are a protective action in the face of an equity sell-off. And just overall, guys, in terms of our trades, right? Really scaling back the size and the frequency of our trades and going for the highest quality setups that we can find and trying our best to play the sectors that are in favor right now in these markets. A lot of consumer defensives, maybe some real estate, some REITs, some utilities, some healthcare, right? Never a bad proposition in the light of potential consumer slowdown concerns and recessionary concerns for the market. Those have really been outperforming as of recently, right? So really more of the defensive names. Now let's jump into some of my portfolio positions that we opened this morning, guys. And you'll see we did open a number of trades for the wheel, and we opened them in the first half hour of the day when the declines were already very good. We were not expecting, obviously, some declines on the SPY of 2% and QQQ 3%, but I'm quite happy with the levels that we still got. So let's go over a few of the trades that we still have here, guys. Not much has changed as a whole, so I'll only go over the ones that are new positions, right? So I'll go over a few of the ones that we still have. CP and John Deere, I'm looking to hold these guys. We have a lot of time left for these contracts, December for both of these contracts, essentially, and they're more defensive names, so I will let them run as a whole, right? So those are probably going to be some of the best performing ones. As the short put plays that we opened today, in terms of the wheel strategy, we have some GDXJ short puts right here for about 41.5. So let's take a look at GDXJ. GDXJ is your junior gold miners. I like this level right here. Usually gold miners tend to be a little bit more defensive in the light of a recession narrative, right? You can see they've been performing quite well, and we do have a nice margin of error for the week, right? 41, 42 is all the way down there. That would require an additional sell-off of another 5% after being down 5% today into this very, very, very large area of support. And all of your longer term moving averages are sitting there as well. So this one should be performing quite well, but I went fairly defensive on it as well. Went with the 41.5s. Now, in terms of the other trades that we have put on for today, we went with some Google 157.5. So you can see we got about 80 cents, which at the time this morning was about 0.5%. And you can see these contracts literally exploded the entire rest of the day. But as I've been saying, guys, I will continue to average into these companies. I like Google right here at 157.50. So even though we are slightly below that right now, after hours, we're actually right on top of it. I really like the stock in this lower location at the 157.50. I am respecting my strategy. And if we come down lower into the lower 145, 140, guys, I will throw another contract at this stock. I like the valuation. It's one of my favorite plays out there. So I'm not nervous about being in this position at all. And I think that has to do, I think that's also another little tip or, something that I can tell you guys, right? In times of market uncertainty, we want to be concentrating in the stocks in which we have highest conviction. It makes holding them a whole lot easier, right? Now, moving on further, in terms of the other trades that we opened for the week, well, you can see right here that we do still have some other short puts. We went with some NVIDIA 105 puts. Now, we went with NVIDIA short puts here today when the stock was trading roughly in the early morning right here after this drop right here. The stock was trading around 112, and we went with the 105s because we felt we had a decent amount of buffer left to be had. But unfortunately now, and at that point, NVIDIA was down about 4.5%. It was one of the most read names in the market at that point. So we went with it because I figured it was a shortened trading week. So any big volatility early in the week could be a good opportunity to get in because the theta decay, when you have such a short week, guys, usually plays in your favor a lot. Now, of course, we are still above 105, but it is being challenged. I only threw one contract at it, guys. I will be looking to possibly average down into this position in the event we really start losing the levels hard. I'm not too nervous about this position. Obviously, we will see how the week closes, but just to say, we are in NVIDIA right now at the 105 strike. So a lot of trading left before the end of the week. We'll see what happens with that one. We got just under 0.5%, guys, and you can see the contracts are a lot more expensive now, of course, right? So now moving on to our next name that we took for the wheel, we went with the OXY 55 puts. This was pretty much in the top 5 options plays of yesterday's video. So 55.40 on the day today. We actually wrote this one when we came down early on in the morning. Right about here is when we took the OXY trade. So right now it's a bit more expensive than when we got it, but I still like the level, guys. We went with the 55s, and you guys know this one, right? Beautiful level for OXY right now. The reason that a lot of oil plays were down today is because oil as a whole had about a -4% day. But I like this company, beautiful support level, and I don't have too much exposure, only one contract. So fairly comfortable with the way this one has been playing out so far. We'll see how it ends the week, but everything that we chose to do today, guys, everything is right now underwater, but I am not nervous at all because these are some of my favorite companies in the game right now, right? Moving on further, we also did some SoFi contracts at the 7.5 puts. Very, very, very small trade here, guys. As a whole, I like SoFi better in the $7 area, but it was giving us potentially a back test of 750, maybe for the continuation of the weekly rally. So I would like to get some shares right around here at the 750 mark. But I only threw 2 contracts at it, guys. Very, very, very light position. If we come down a lot further, as we did at the sell-offs of last month, right? If we come down a lot further at the $7 range or even 650, I'll be looking to build a lot bigger of a position on SoFi, guys. I love this company, and I think it's going to perform very, very well over the next 6 to 12 months. So this is a position I'll maybe look to build into and scale into and build a position that I really want to be holding on SoFi, maybe for the foreseeable future. I would not be opposed to taking a longer duration swing trade on this company, but for now we're only in it for 2 contracts as part of the wheel strategy, right? And the last couple plays we took was the Square 61s, also featured in the top 5 options plays of yesterday. So Square, just because of the valuation, guys, the valuation is so cheap right now. It had a nice decline today. So we are all the way down here at roughly the $61 level, right about here, roughly in line with our big support area as a whole. I would not mind being assigned Square in this location, guys. If anything, we'll just hold the stock. And then when we do get a nice little bounce, guys, we'll be able to make a decent amount of money. But I love this company, guys, as a whole. No red flags for the business, especially as of their most recent quarterly earnings. And the valuation is so cheap right now. They're a profitable company. They're growing very well. No red flags with the business. So I will give them a chance and throw 100 shares at the $61 mark. We will see if we get assigned or not. And then lastly, one last one, guys, right? TSM 152.5 puts. We got about 74 cents for them. Those are holding up quite well because we pretty much got the low of the day. We got these when TSM was roughly down, arguably the same percentage amount in the morning, right? So looking pretty good on those. I love TSM in the 150, mid 150 range. So looking to get some nice support area from the bulls right here. Still a lot of room to move on the week, guys, right? All the way to my assignment price, 152.55, would be another sell-off of 5%. I would not mind being assigned this company right here. If anything, I do have the buying power to throw another contract at it if we start revisiting some of the lower 130 levels, guys. But this company, guys, I've listened to the earnings call. I was very satisfied with it. The valuation down here at the 152 will be a bit more manageable, probably about a 1.2 peg. Not that bad at all. And the CEO has reiterated that demand is through the absolute roof, not only for the rest of 2024, but they have full booking orders and full logs, right? Backlogs of orders through the end of 2025. So this company may just be going through a little bit of a technical correction right now, trying to set up for some monthly higher lows before undoubtedly resuming its rally to the upside come 2025. The demand for this company is absolutely ridiculous, and I am not nervous at all being in one of the highest quality companies in the entire semiconductor industry. So that's pretty much everything in terms of the positions here, guys. You can see we got a lot of tech, but now moving forward, what we're going to be looking to do is add a lot more value to the portfolio as a whole. And I forgot one position, excuse me. I forgot a couple positions right here. We went with some Google bull call spreads right here for November, 170s versus the 175s. Just looking to make a play on Google being somewhat oversold right now. And we put a lot of time on these contracts, guys. And I will be averaging into them in the event we come down into the lower 150 range. And the second debit spread we did today was a Tesla bear put debit spread right there, looking for some downside. We went with the Octobers, 200 versus the 195s, 186 for these. And these should perform quite well. We went with 3 contracts, looking for Tesla to start retesting that 200 to 195. And if they do, we should be able to close these at a very nice profit, right? So those are all the trades we made today. Hopefully that was helpful. You will see a lot more trades from me, guys, especially in this market environment. I will be looking tomorrow to possibly place some shorts and possibly place some hedges for the month of September. So stay tuned for those. And of course, if you want all of my trades in real time, guys, always feel free to click the link down below to get access to our private Discord, where I give all of my trade alerts. We do live trading together with a live market stream in the morning, 9 o'clock through about 10:15 in the morning. So we can spend some time together, analyze the markets, analyze the best trade setups, and then place the trades. And then obviously you guys get a lot more. You can chat with me all throughout the day in the Discord as well. Ask me any questions you want. We do have some member exclusive content and tons of more perks. So hopefully to see you guys in there. And if not, always consider liking the video, guys. Would appreciate it for the growth of the channel. Secondly, consider subscribing to the channel if you're new. We do these daily market recaps every Monday through Friday after the close. Hope to see you back in a future edition of one. And lastly, if you have any questions at all, especially in these markets right now, please leave them down below in the comments, guys, and I'll be sure to answer you in the next 24 hours. So take care, guys. Now is the time to stay level-headed, right? Let's remove our emotions from the equation, establish a strategy, establish a buying list of stocks that we really want to buy with levels that we want to buy them at, and respect our strategy rules as a whole, right? Level-headedness and emotionless trading and investing is what's going to set you guys apart from the rest. So always keep that in mind. So take care, guys. I'll see you tomorrow after the close. Love you as well, and peace.